hot picks today. We're going to focus on technology, and our guest has selected 3 stocks he says are forgotten software leaders. We're joined by Gil Luria, head of technology research at D.A. Davidson. This is intriguing. So these are companies that once were go-go software stocks but have been neglected lately?
Yes. So one of the things a couple of things that have happened the last few years, last couple of years especially, is that software companies have matured and increased their profitability significantly, while at the same time, investors are so preoccupied with AI that multiples on software companies have gone down a lot. So you have some of these great software companies that are market leaders that are growing double digits, sometimes even 20%, trading at only 20 times cash flow. And those are the 3 that we picked for today. Great companies doing well, accelerating revenue, and yet the market's only putting a 20 times cash flow multiple on them. So that's what we find these 3 particularly intriguing.
Tell us about your first name, Pegasystems, P-E-G-A on NASDAQ.
So this is a company that's been around for a long time. They help automate work. So they help create these tools for companies to have complicated, long workflows automated. And they've adapted really well to the age of AI. It helps them sell the product more. It helps them deploy it faster for their customers. So they are now seeing accelerating growth, and yet their multiple remains very low. It's a great company that's been around for a while, is evolving well, and is very attractively priced right now.
Monday.com, a collaboration software company. Again, you think the market is neglecting this one?
Yeah, so it used to be a darling, but it's gotten hit the last couple of quarters as it goes through a transition from only serving small, medium-sized businesses to serving larger and larger customers. As they make that transition, growth has decelerated a little bit, but they're still growing more than 20%. We think that's sustainable. And again, now they're trading at a very attractive multiple.
And isn't that fascinating? We've seen a couple of our software darlings here, well, they're IT services darlings, Constellation Software and CGI here in Canada. People have been dumping those. They've been hitting their lowest price in at least a year. And then finally, Zeta Global, Z-E-T-A. Again, you feel that investors have turned their back unjustifiably on this one?
Yeah, the growth here is completely unimpeded. Again, it's in the 20s.
Wow.
Zeta helps marketing organizations with their marketing flow, finding customers, serving them, helping get the engagement with those consumers. And they're doing a great job of that, helping these companies connect with their advertising agencies. The growth unimpeded, the stock is still depressed, still trading in the 20s on cash flow. We think that as investors see them grow year in and year out, they're going to give this stock a lot more value.
And is part of their approach helping companies reach consumers without having to go through the gatekeepers, Meta and Alphabet?
That's exactly right. So they have a consumer graph that's independent of Meta's and Google's. A lot of advertisers and marketing agencies are very reluctant to hand off all of their marketing to these 2 digital advertisers. And Zeta gives them a great alternative to do that because they have this other independent perspective on where the consumers are at.
That's interesting, just with their own data and big data crunching?
That's right. They have a way to collect that consumer information on the web. They've been doing it for several years. It's very proprietary. Really, only they have access to that data. And that's how a lot of how they provide value for the marketing organizations and the digital advertising agencies.
I just wanted to loop back to Monday.com if I could. They sure are growing. The revenue apparently in the latest quarter was up 26% year on year. But apparently the beat was lower than the average in the previous 4 quarters. And the 4th quarter revenue forecast missed expectations. So are there cracks emerging in the Monday.com model?
We don't think so. We really think this is about that transition. Their product is now so good They're not just serving small businesses that don't have an alternative for collaboration software. They're starting to get business with large companies instead of Smartsheet, which was the incumbent, or Salesforce, which is an incumbent. They're starting to get bigger and bigger deals. Those deals are less predictable in their timing. And so if they have just a couple of these really large deals slip a quarter or two, that's why growth may not be quite as fast as it is right now. We think that's a transition period. They'll resume that very fast growth that they are currently experiencing soon enough. And that's worth a lot more than is trading it right now.
And it's interesting how the power of Google and Meta keep coming up. Apparently, I'm just looking at one analyst commentary here. Google made changes to its algorithm, the search. And so Monday.com switched to new marketing channels. And they say that's been working out. But it really does raise questions over just how much sway should these few companies like Google and Meta have over the internet.
Well, that's right. And that's why the Department of Justice is trying to break it up, so far unsuccessfully. But Google has so much market power that anytime they even tweak their algorithm, they mess up businesses all across the board. And that's what's happened here. As they transition from traditional search to AI-driven search, they changed their algorithm. So as an advertiser, all of a sudden you wake up in the morning and you realize your yields are different. Which contributed to Monday's transition issues, is that funnel changes. That doesn't mean all these companies from Nordstrom to Groupon to Monday.com can't adapt. It's just that Google writes the rules of the road, which is why there's so much push from the Department of Justice in the United States to break that up.
I guess one thing, I think maybe you and I have talked about this before, people do searches now and they just look at the AI's answer. They don't bother clicking through to the underlying websites.
Yes, but that doesn't mean there isn't advertising. Google's actually results haven't dipped at all as they've made the transition. They continue to advertise. They understand how to work through the transition. It's just everybody else that has to catch up. Google continues to grow. In fact, they had accelerating growth in spite of this transition to AI-driven search. It's just that they were prepared for the transition. Everybody else gets caught off guard anytime Google makes a change.
Yeah. Gil, thank you very much indeed. Really appreciate it. Gil Luria, Head of Technology Research at D.A. Davidson.